we're primarily early stage investors. So it comes a lot down to the founder and their vision, right? And their ability to execute on these things. Like, do they have what it takes to grind every single day to shift this market and create an inevitable force around their project?
All right, everyone. Before we get into the episode today, I want to talk a bit about Access Protocol. They're built on Solana and solving the subscription problem in a crypto-native way. We'll talk more about them later in the show. Before we get moving on today's episode, just a quick disclaimer. The views expressed on this podcast by either myself, my co-host, or any guests are their personal views and do not represent the views of any associated organization. Nothing in this episode should be construed or relied upon as financial, technical, tax, legal, or other advice. Additionally, references to any securities or digital assets are for informational purposes only and do not constitute an investment recommendation or offer to provide investment advisory services. You may also navigate the disclaimer page on the Reciprocal Ventures website for more information. All right, let's jump into the episode. All right, everyone, welcome back to another episode of Lightspeed. Mert and I are joined today by Craig Burel, a partner at Reciprocal Ventures. I'll definitely let Craig give the intros here, but they have been around the Solana ecosystem since the very, very early days. So a longtime friend of the chain, and it's great to have you on, Craig. I'd love to just get a bit about your background, and then let's dive right into Reciprocal Ventures. You know, where do you guys find your edge, and really what are like your core values when you're looking to make investments in this space?
Yeah. Well, first of all, thanks so much for having me. Been a long time fan of the show, so great to finally make it on. Yeah. So, I mean, my background, I guess I've had like a winding road with crypto. I started my career in traditional finance at Morgan Stanley. Always had these like two competing passions of, nascent early stage technology and capital markets, financial markets. So, I've always wanted to find a way to merge the two. I guess the most logical, first step for me was joining big bank, and researching technology companies. So, joined Morgan Stanley. I was, working on the equity trading floor there, covered tech, media, and telecom for a few years. I kind of quickly learned that you're not necessarily on the bleeding edge when you're researching publicly traded companies. Fantastic skill set. It was a really rewarding period and great to learn how to value and analyze companies. But I was always like wanting to go deeper, wanting to go earlier into more nascent stuff. I really fell in love with AI in like 2013, and so this was like way before AI was cool. And so I left Morgan Stanley to join an early stage seed stage AI company called Fiscal Note. But I guess I also had some intersection with crypto while I was at Morgan Stanley. One of my teammates at the time, he was roommates with Fred Ursum, and I guess they kind of fell down the Bitcoin rabbit hole together. So he was trying to orange pill me. I was having none of it, so yeah, much to my chagrin, I guess. But anyway, I moved on, went into the AI space. I was the first sales and growth hire there, like really trying to figure out how do I commercialize this super nascent natural language processing technology. We had some cool core IP where we were able to predict what was going to happen in public policy, what the public policy landscape would look like going forward. So my job was to try and sell that to large corporations, to large companies. So at first I was the guy grinding it out, doing cold calling, cold emailing, trying to figure out how to sell this. Eventually had some really, really strong breakthroughs. We were able to scale that business up to, 0 to 10 million in ARR in under 3 years. It was pretty awesome ride and super valuable experience. But, as we were expanding, our kind of go-to-market landscape and process, we started looking to earlier stage companies that were going to be dealing with heavy regulatory headwinds. So we started working with like Uber and Lyft to help them unlock new markets. And eventually I came back across crypto. We onboarded Coinbase as a customer. And that's when I learned about Ethereum for the first time. And I think that was the first like real big unlock for me when I learned about, the concept of a global shared compute database, smart contract platform, the idea of building new protocols on top of a smart contract platform that could, automate functionality for, whole business units or companies. that was like the real aha moment for me. So I actually decided to make the jump from operator to venture to the dark side. And I met my partner, Mike, who had just founded Reciprocal in like late 2016. And so I was going through interview process, and it was like final interview. I wanted to make a pitch for us to like really focus on crypto as a big part of our business. So I tried to come up with a pitch that would like really crystallize that. He comes from the hedge fund world. He had, he was one of the first portfolio managers for Steve Cohen at SAC Capital in the 90s to cover the internet. Had a really cool, a really great run there through Web 1, Web 2 era. And so, he's a capital markets guy. I came from capital markets. So I think my initial pitch was 0x protocol as a way to automate and disintermediate, my former employer, Morgan Stanley, on the sell side, and Numerai to eventually disintermediate the hedge fund business on the buy side. So yeah, I got the job. And that was early 2017, and that was essentially the start of Reciprocal. We ended up digging into crypto. We jumped in head first, and kind of never looked back.
Awesome. Yeah, can confirm that Mike is extremely based. So okay, that's how you got into crypto, and you did growth and sales before. How did you come across Solana? Because you guys are one of the earliest folks into Solana. You have a very specific Solana focus, or heavy Solana focus as well. What was that like? What is the story from that?
Yeah, well, I think Dan, you asked about our edge, and I didn't quite get into that component of the firm, but it is super relevant to the whole like Solana, initial Solana story for us. So I think like the way we define our edge, just to touch on that really quickly, is we're boots on the ground. Like we fully believe that you have to be deeply integrated in these communities. And I think like I learned that as well as an operator. That was true to my core. That was true to Mike, in the hedge fund business. You have to go really, really deep into the specifics of every single company and industry. So, we fully believe that we needed to be active participants in this crypto economy if we were going to specialize in it. So, and the other, which I think goes hand in hand, is being founder focused, first and foremost. I think like we view portfolio support and founder support very differently than most firms. I think most firms view it as, kind of a cost center, right? With each additional portfolio company, your cost of supporting them increases. We view it as a profit center. So, I think when you work more closely with your portfolio companies, that's really the best alpha that you can potentially unlock. You're working with people who are on the bleeding edge of this industry, developing on these new protocols in real time. The things that you learn from them, and then the opportunity to really dive into those things in depth to understand what the bottlenecks and problems are. I think as investors, that's honestly one of our greatest opportunities to create returns for our investors. So we view portfolio support as a profit center that's paramount to what we do, and that's been our edge. I think that directly ties into the whole Solana story, like I said. So we actually invested in 0x in the ICO, and that led to us starting to understand the decentralized exchange landscape. And we made a seed investment in Radar Relay. It was the first relayer, if you remember the 0x relayer model on the 0x protocol. So we were working on helping them kind of figure out their go to market, and a big part of what we do is facilitate introductions to large industry counterparties in TradFi or really any industry. So we created a meeting with one of the largest quantitative hedge funds in the world. And everything was, really, really cordial and nice. We were kind of like exploring, what they could potentially do in crypto. And remember, this is, 2017. It's very early days. And I think once we got down to the technical specifications of what it would require for that firm to trade on, Ethereum L1 at that time. It was, the fees and the throughput, the concept of a mempool, those were all kind of just non-starters for them. So that's when, I'd say we had like a bit of a light bulb moment in terms of like the drawbacks of Ethereum and, starting to look for alternatives. I think obviously they did as well, right? The CTO of that company, he was really kind of scouring the earth for scalability solutions. He was like looking at plasma and other things that were being researched at the time. And I asked him, like, what else do you think is out there that has serious potential? And he said, this guy, Anatoly, was working on something called Loom Protocol. He wrote a white paper about it, shared the white paper with me. And he was like, in my opinion, if they can actually build this thing, if they can solve the engineering behind it, in theory, it sounds like it could really work. So I asked for an intro. I got connected to Toly and Raj. Shortly after, flew out to San Francisco, met them in person. And, the original pitch was, NASDAQ or blockchain at NASDAQ speed, right? So it just felt very serendipitous that, that was kind of the lead in for our belief that we needed a new, something new to scale blockchain. That was kind of the origin initial meeting story. We ended up investing a few months later in the seed round. And it's been incredible to watch them do what they've done.
All right, quick break from the episode here to talk to you about Access Protocol, the easiest and best way to stay updated on what's happening in crypto by following your favorite publishers. You can gain access to over 60 publishers, including CoinGecko, CryptoSlate, and a whole list of independent creators. Most importantly, you can also do this without managing a bunch of different subscriptions. We all know how painful that can be. So how it works is you find your favorite publishers, you stake the ACS token, that's the access token, and once you stake, you gain access to all of that creator's content without the hassle of ads or subscriptions that you can't cancel or lose track of how many you have. Access Protocol already has over 225,000 users that are finding new creators, reading content, and even receiving NFTs from their favorite creators. They're soon releasing V2, so check it out, the link in the description to go give the protocol a try. It's an awesome product, it's crypto native, and it's built on Solana. All right, back to the episode. There's no doubt about that. But I want to ask a question related to more of like your due diligence process. So you have a very like capital markets background, as you mentioned, working in public equities.
Yep.
A lot of those decisions are driven off like fundamentals that are very like data driven. You're building out models that help you understand the business. You're tweaking your future assumptions. But then you look at, even just going to a VC in the traditional world, that's still a very different landscape. And then you throw crypto into the mix and be a crypto VC. Like, how does that all shift? Like, how much of your job today, when you're doing a due diligence on a new potential company that comes across your desk, how much of that is really like driven by the more fundamental data side versus making a bet really on the team or like the sector or vertical that this potential company is in?
So first and foremost, like we invest pretty early stage. We're like pre-seed through Series A. We do some public token buying. I know like stage constructs in crypto are very different than traditional venture. So, you normally don't have Series A stage companies going public, right? With an asset. So, there are instances where we buy public tokens, or we'll buy tokens directly from projects that are already publicly traded or something like that. I think in those cases, there more quantitative analyses that we'll do. We'll like run regressions and test certain theories in terms of like what are the drivers of an asset. But when you're early stage, the founder is like all that matters, right? They're the most important thing. So what we're looking for is really founder market fit. And I think like, well, first of all, like there's some personality traits we're looking for. We're looking for like grit, tenacity, determinedness, like all these different character traits that really, you can tell when you meet someone that they're going to push through friction, that they're going to break through walls, right? I think that's really important. But founder market fit is paramount for us. And I think like, not to, boost your ego any more than it already is, Mert. But I think that was that was one of the things we found when I met you, right? Like, we were working on a thesis at the time that, these new high performance networks, Solana specifically, was just not being sufficiently served by existing infrastructure providers who were horizontal. We really truly believe. I published a thesis about it called "The Age of Abstraction." That we were essentially going to need ecosystem specific infrastructure providers to kind of like take the torch from the labs entities of these high throughput chains like Solana to lead the technical development, dev tooling, and support for the technology long term, right? In the 5, 10, 15-year time horizon. And I got introduced to Mert through another one of our portfolio companies. And the very first few slides of his pitch was horizontal infrastructure doesn't work, right? It's all about verticalized infrastructure for these high performance chains. It's the only way this is going to work, and we're going to get high quality apps in the long run. So finding that level of conviction and determination and clarity of thought, I think, in initial mission is really important.
It's funny to mention that, because I was going to actually ask this before Dan a few minutes ago, but it's still relevant, which is that a lot of VCs kind of invest in these chains, like a high throughput Solana, and then maybe they'll go to Sui, and then Say, and then all these other ones, and just kind of keep funding chains. Whereas you guys actually are more vertical, it seems, where you do fund a lot of ecosystem teams within the ecosystem you already funded, the Solana, for example, right? So like things like Squad, Soulflare, Ironforge, Helios, etc. Is that related to this? Like, why? I guess what is the angle for that approach as opposed to kind of diversifying more?
Right. In terms of, to be fair, right, we're ecosystem agnostic. Like we're not a Solana fund, like ecosystem fund. But I do think, in terms of monolithic L1s, I think we very much believe that Solana is doing all the right things. Like we re-underwrite our theses on a quarterly and annual basis. And I think when we've looked into Solana in terms from a diligence perspective, they just continue to do all the right things, right? They're like rigorously focused on go-to-market. They're super pragmatic. They're product and commercialization oriented, right? They continue to ship for specific use cases with big industry partners who like want to use the technology. All of those things are just like incredibly bullish to us. So that's why, we've continued, like we made our initial investment in 2018, and we've continued to double and even triple down on the ecosystem, both on Solana, but also on, many of the companies that are building core technology and applications on top of the tech.
And so, you first invested in 2018. When you look at the last, 6 years now, how have you talk to us about the progression you've seen on the chain? What are the major developments that you've seen happen? And then I guess following on towards the end of that, like where do you think we need to go from here? Like what are the big unsolved problems when you look out at the Solana landscape today?
One of the reasons we got so excited about Solana and, its capabilities was like we really truly believed it was going to expand the design space of what could be accomplished on a blockchain by orders of magnitude, right? And I think, admittedly, like that takes time. If you look at the first kind of iteration of projects that launched on Solana, some of the projects looked like crypto projects from other ecosystems, and I don't want to say copy pasta, but there was definitely influence from what had already been done, and I think that's only natural, right? It takes a lot of time and a lot of effort and research and iteration to push the boundaries of that design space and figure out what's possible. So I think, in the last few years, we've really started to carve out these only possible on Solana or OPAS use cases, which, like Deepin, for example, one of the use cases that I think is clearly becoming, a winning theme for Solana and the ecosystem. And, we're seeing new projects get started every hackathon in the space. And we're also pulling these large enterprise projects like, Helium and Hivemapper and Render from other ecosystems that, couldn't support. They couldn't ignore the performance and, and cost advantage of using Solana. So, I think there's clearly, a new class of projects, a new generation of projects that are starting to launch on Solana. And, I think we're like really excited to follow that design space and, see how it plays out.
Some VCs in the space, like for example, when they look to make an investment, it's like, will this investment outperform the underlying token because of the liquid aspect of crypto, right? Like, do I invest in Helios or do I just buy Solana? Okay. How do you think about that as a VC? And how would you maybe advise founders think about that as well? Because it's not a serious, but it's a real thing that comes up when raising.
First of all, I think people tend to underestimate like how long these technologies have to compound when founders are great at executing, right? I think, that question of should I buy equity or should I buy token, it's a little bit short-sighted in some aspects. I also think like tokens are a fantastic incentive mechanism, but they're also, incredibly volatile and cyclical. And, I think if you're building like real hard infrastructure that supports an ecosystem, I think there's an opportunity to capture returns that are not necessarily factored into the token of the L1 that you're building on top of. So some people may view it as a levered bet on the underlying L1 token. I think that for a time is potentially justifiable. But I do think there are unlocks from investing in, a revenue generating entity that's handling the relationships and the service provisioning to large enterprises that can't necessarily just be captured in the publicly traded token, if that makes sense.
You mentioned you invest in liquid tokens, obviously like Sol, but I'm just assuming other projects as well that are more on like the app layer. But of course, obviously participating in VC rounds. How has that market landscape shifted over the last few months? And what is it like? What does the current state of things mean? Like, where do you see better opportunity right now? Is really, I guess, the question I'm trying to get at.
I think you do have to assess the market and the moat, right? And if you're investing in anything that's like a new entrant into an existing market, what's the opportunity to displace the market, right? Or I think it's Mark Andreessen that has a famous quote about like how malleable the world is, right? If you just put in like consistent effort, right? So I think about that a lot with these markets, and if you think about like how much the market just over the last 2 years has changed using the exchange space, right? Like I think a year or two ago, nobody would have thought that Jupiter would be competing with Uniswap in terms of daily volume, right? So I do think there is an opportunity to invest in new entrants in some of these like legacy categories. But again, for me, like we're primarily early stage investors. So it comes a lot down to the founder, like and their vision, right? And their ability to execute on these things. Like, do they have what it takes to grind every single day to shift this market and like create an inevitable, force around their project versus something like a Jupiter. Jupiter has like a very strong moat as a DEX aggregator and kind of like, the de facto like liquidity front end for the space, or at least for Solana ecosystem. So, I guess that's like how we would, or the mental model we would use to kind of assess that situation. I hope I answered your question. I'm happy to dive into that more as well.
What interests me here is kind of the focus on the founder, because you're obviously an earlier stage investor, and there's a hackathon right now, right? Coliseum, and there's going to be a lot of people who are going to participate in that, probably watching this. What exactly do you look for when you say you're looking at founder market fit? Like, what are some things? Like, obviously, you said like tenacity, grit, and ability to break walls. How do you look for that? How do you assess those from, let's say, an in-person meeting or a Zoom call, or right? What are some things you look at?
Yeah. Well, I mean, I think like a lot of it is how informed is this person about the sector they're going after, right? Like you obviously want someone who has, a deep understanding of the market that they're going after. So when I say founder market fit, right? Like they didn't have to work at like the biggest company in that existing market, right? But I think having something that makes you like uniquely dangerous is really important, right? Something that really equips you in going after the incumbents in that market. So I think that's what we're looking for. Like not to keep harping on you, Mert, but like you worked at Coinbase, right? Like you saw that they didn't want to support Solana. You like didn't love the way they were like managing their product roadmap in support of new ecosystems. You also managed a lot of their APIs and data and infrastructure. So in my opinion, that made you uniquely qualified to kind of build out a dev tool infrastructure business on one of these new ecosystems, right? So I think we do a lot of pattern matching and trying to find data points like green flags like that, and it's never identical, it's never the same, right? But it's like when you identify one of those things, it's digging into it and getting a feel for is that enough? Right. And it's a very subjective, it's a hard thing to measure and quantify, right, by nature. I think the other thing, right, is, it's a personality thing. Like, does this person, like, again, not to say like have what it takes, but it's also, can we work with this person long term? Like these are 10-year relationships, right? Like we're going to be working together for a very, very long time. Like, are we aligned on how we view the world? Like, do we see the world the same way? Like, do you appreciate like having investors who are very active and hands-on, or you do like never want to see us, which in some cases is a bit of a yellow flag. So, I think we're also trying to assess like what kind of relationship can we build with the founder, and will we be a good partnership? I'd say we tend to view these relationships more like partnerships than just a portfolio of investments.
Yeah, actually, we work together, me and you. And one thing that I have learned a lot from talking with you is kind of the importance of, let's say, sales, and kind of especially as a technical founder, you tend to have some preconceptions about how sales work, what marketing is, what is growth, et cetera, all these different non-technical assets. And I think Solana founders, but really crypto founders in general, struggle quite a few, like very much with this. They kind of just think giving people free money is marketing. There's no rigor, there's no method, there's no process. And this is something that's helped me a lot. So I guess like the question that I want to ask is, what are some mistakes that you see startup founders, especially in crypto, make with respect to sales?
Oh yeah.
And
Yeah.
go to market? Because that is something you obviously, first of all, did at Fiscal Note, and you also help with continuously, including to myself.
Yeah, I mean, how much time do you have? I feel like we could do a whole separate podcast just about like go to market and sales in crypto. But yeah, I mean, in terms of mistakes, like I've seen everything, and this is a topic that gets me a little fired up because I've been preaching maybe unsuccessfully for 6-7 years about the importance of go to market in like startups in general, right? Not just crypto, but in crypto as well. I think historically people in crypto have had a very like I'll build it and they will come kind of mentality. And that was actually, that was one of the things that really stood out to me about Solana, is that like they had the complete opposite approach. They were like totally ready to sell even before mainnet, right? Like mainnet beta. They were like, Raj wanted to go and meet with enterprises and talk to them about potentially using the tech for their own use cases, right? And then like the network mainnet beta launched in 2020, and it was like, all right, we got to get a grassroots dev evangelism strategy going. So Maddie came in, spun up the hacker houses, the hackathons. I mean, they kind of wrote the book on blitz scaling for L1s, So in terms of not doing it right, I think there's the other way, right? We're just going to build this thing and hope that people use it. And in my opinion, that's the worst thing you can do, right? Like you have like the space, especially now, right? The space is just too crowded. There's too much noise, and it's especially so when things start going well, right? During the bear market, ironically, it's a little bit easier to stand out because there's fewer people, trying to be loud about crypto. During the bull market, it becomes exceptionally difficult to stand out and differentiate yourself. Everyone's raising money, everyone's announcing things. So I think starting early is like my biggest recommendation for projects. And for me, that starts with just like basics of product development, right? Like if you're building a thing, go talk to 20 potential design partners who you like could be just a hypothesis. Doesn't have to be for real yet. Go talk to 20 potential design partners who you think might get value out of the thing you're building, and test it. Test your hypothesis, test your assumptions, right? Go see if they'll sign up to be a, contracted design partner with you, if they'll co-develop it with you. And by doing that, right, you're not necessarily asking them to pay anything. You're asking for a commitment of their time, a commitment of their feedback, their resources. And when you do that, you're essentially helping to shape your MVP as well as your initial go-to-market, because you can use those partners as a jumping off point in each industry, right? So for something in dev tooling or infrastructure, it's like, go get a DEX, go get an NFT project, go get a game, right? A crypto game, cover all the major verticals and get a, kind of flag in the ground customer in each one of them, in each one of those verticals to use as a jumping off point. Whenever I see projects not doing that, I try to encourage them to do that. And honestly, that's a big part of like how I work personally with portfolio companies, is helping them like kind of map out that process and what that looks like.
And so that's yeah. So if you're listening to this and you're going to do Coliseum or any hackathon, make sure you pay attention to that. Talk to your users part.
And also, I'm a judge for Coliseum for the hackathon. Sorry, the Renaissance hackathon. So I'm happy to help support whatever on anything go-to-market, product development, product roadmap related, whatever you need. I love talking about this stuff. So I'm a complete like go-to-market nerd.
I can confirm. So imagine a situation where you have a technical founder, which is generally the case on Solana, and this person is like, well, I want to offload this to a marketing agency and something like that. They don't really know who they're going after yet. What would you like tell them? Like, what is maybe like a few steps that they should take to increase their probability of success in go-to-market, sales, hiring, forming the best team possible?
Yeah. I mean, so like that's the other mistake, right? Is like ignoring the customer. Like if you don't know who you're going after, if you like, so something I learned about very early in my operator experience is like the importance of customer profiles and personas. You have to develop your customer profiles and personas. Otherwise, you just don't know who you're building for. So like that was one of the things you said, right? Where it's like, we don't really know like who this is for yet, right? It's like, okay, so you just have a hypothesis that this technology could be useful to someone for some reason, right? It's like, well, go out in the market and test that, and like, I think I get it, right? It's a scary thing to go and sell, as a founder or anyone, right? Like there's pretty much constant rejection, when you go and sell, but if you do that, if you break through that barrier and go and sketch out those customer profiles and personas, like you're only doing your company like a massive favor. You're like, it's going to be so much easier to pitch investors. It's going to be so much easier to pitch new customers. You're going to start to understand your narrative and the value proposition, and you're going to hear it from them, right? Like you just ask them questions, they'll tell you what the value is of what you're building, right? So yeah, I think, getting out there and talking to your customers and identifying them early, even if you have no clue, right? Just start having conversations. That's the number one thing I can recommend.
Yeah, go ahead, Dan.
I was just going to kind of piggyback on this topic because I've seen a recent trend, and Mert mentioned something. He had a quip earlier that was like a lot of development teams have kind of viewed as giving people free money through airdrops as their marketing tool. And I feel like I've seen a recent trend in the space where the same team will create an additional token for an additional product, right? So there's some recent examples of this: Unibot, Unisol, Trader Joe, Merchant Mo, Velodrome, Aerodrome, Blur Blast, Solend, Sweeland. And like it's the same team, but they're building another product or service, and then they create a new token specifically for that. So I'm curious just to kind of get your take on how you as an investor think about that, because I'm trying to get like a mental model for this. And it's like, what if Apple had iPhone equity and MacBook equity? Like that seems very ridiculous. But I just want to get kind of learn how you think about that.
Yeah. I mean, look, you said it yourself, right? Tokens are a tool. I'd say they're not a holistic strategy, right? So if you look at the best in the business, right? Like Solana, there is a native token, right? But there is also this incredibly robust, cogent, well executed go-to-market strategy that sings in harmony with the token itself. Right. And obviously that's like an extreme example. Solana is an incredibly successful project. It's also an L1. But I think, the concept of just launching a token and that being the go-to-market strategy is totally insufficient. There has to be a number of complementary things happening alongside that for it to really work and be long-term sustainable.
Yeah, absolutely. So, so I guess one of the things I wanted to ask on the previous thread is, so obviously, yeah, you need to have this go-to-market strategy. You can't just release a token, or you can't just build a thing, right? Basically the theme here is you can't just neglect go-to-market and then do things in isolation. You got to talk to customers, you got to do sales, you got to do marketing. And I think, if people listen to this show, probably they've heard me talk about this a few times. And that's all, good, whatever. But then people will be like, well, I don't know how to do this, right? I don't know how to talk to people. I don't know how to talk to users. So what are like some tactics when talking to people? Like, how should people, like, basically what I'm trying to do here with this question is make it such that people who listen to this have zero excuse to actually talk to people and how to structure those talks.
Yeah. Well, so a couple things, right? I think another mistake founders make early on when they're raising, seed, Series A rounds is, they don't stick it to the investors that they're meeting with. Like, I think they feel that it's a, one-way street. They have to pitch, right? Like, they have to prove themselves to their investors. That's not always the case. Like, you should ask your potential investors, like, what are they going to do for you? Right? Like, what do they bring to the table? And I think if you're someone who doesn't have experience in go-to-market or sales, like, you should have that on the cap table. Like, that's something, like, you should list that and like carve out an allocation in your round for someone like that. And I think during bull markets that gets undervalued a little bit. But in terms of like actually going out and learning, like, tactically speaking, there's a lot of reading you can do on sales, like how to sell, like basics. I think on my Substack, I posted a blog post a couple of years ago. I'm happy to send it to you guys so you can link to it in the show notes. But it was like the top books that you should read, that like every founder should read, and there's like a whole section on go to market there. Books I read when I was an operator. When I was an operator, like I didn't really have any, outside sales experience. I kind of had to like teach myself, right? Like I had to figure it out. I had to read books and, go through trial and error and just kind of figure it out and work my way through it. So like, there's your proof. There really is no excuse. You kind of just have to do it, but I'm happy to link to that. And, tactics, like, again, if you really want to get into like gritty sales tactics and like how to be good at selling, that could be like a whole podcast series. To coach you, you and I have gone through sales coaching, Mert, right? Like, very rarely is it just like one session on coaching and like how to do a thing, right? it's very like situation specific, and then like you design a strategy based on, you know, the exact product and customer profile that you're going after. So, you know, happy to come back another time. We can talk about sales strategy, but yeah, my short term, you know, advice would be check out the list of books that I've recommended. They're all great and they're all really helpful in kind of like teaching you how to execute on the sales front.
So let's zoom out a bit. So we talked tactics, startups, and how you got started, et cetera. So I want to ask you what you think is one missing still from crypto that you would like to see more, like that you're looking to. Because obviously, like for example, when you invested in Helios, you had the thesis of abstraction. You knew that this needed to happen. What are some other things looking forward do you think are needed for the industry to kind of take the next step?
Yeah. Well, I mean, I share a very similar point of view to you, and I think, you know, a lot of people in the Solana ecosystem specifically, that we need more applications. You know, we need more people focused on product, on user experience, on creating applications that are uniquely capable in crypto, or have some like truly unique experience or feature driven by crypto or blockchain. And I think, you know, every cycle we get a little bit closer to that. I'm super excited for the next couple of years on Solana, because I just feel like, you know, we've only seen just like a glimpse of what's possible to be built on Solana, like those OPAS use cases, right? And you know, we've seen some really cool things developed in the last year or two, and I think, you know, we're only going to see more applications that are, you know, in the deep end, the gaming space, the DeFi 2.0, right? We're seeing like Jupiter, Camino, all these apps come to market with like really clean user experiences. They're so much more productized. You know, I feel like if you use Jupiter, Camino, it's almost difficult to tell that you're using a crypto app. They're so smooth. So just more of that. I think that's honestly the biggest benefit. You know, another thing that I'm really excited about, you know, is token extensions. I think, you know, though, like, you know, I might have mentioned this earlier, but those are features, right, that have been asked for from large financial institutions. So, you know, blacklisting, whitelisting, season freeze, you know, those are things that are gonna get the payments industry, the, you know, the asset managers, the banks, you know, it's going to get them off the bench, and I think starting to do more on chain. Right? If you think about the RWA space, we have like $1.5 billion in assets, you know, onboarded on chain using blockchain as a backend. There's $500 trillion of financial assets out there. So we have a long way to go and a lot of wood to chop. But, you know, the fact that Solana is continuing to be, you know, use case oriented and commercially oriented by partnering with these large institutions and building specifically for their needs, you know, I think that makes me incredibly optimistic about what's possible in the next few years.
You are actually so talking about use cases, you're an investor in probably, I mean, certainly my favorite game, but also I think the most underrated app in all of, I'll say all of Solana instead of all of crypto to be a little less dogmatic, but it's yeah, it's
Too bullish.
quite a good app. Yeah. And I think we had Ian on. So I'm talking about Ian from Photo Finish Games, which is a horse racing game on Solana. Ian obviously invented the hit stick on Madden and worked on all the Madden games, worked at EA with like Michael Vick. Crazy competent guy. First, I want to ask, what do you think about the state of gaming in crypto? And what do you think needs to still happen there to get to the next level?
Yeah. Well, I mean, part of it is more time, right? And I think there's a bit of a misconception in crypto gaming, right? That like everything needs to be a AAA game. And, you know, there's a lot of projects out there that are working on AAA game competitors, like, you know, like Star Atlas, for example, right? The problem with those games is they take a ton of capital and a ton of time to develop. That's just, you know, like the physics of developing those games. You know, one of the things that I love about Photo Finish is it's like relatively simple, but it's, you know, it reminds me a lot of like early daily fantasy, right? It's like a skill-based game. So, if you do your research and, you analyze the races and you're stable, like you can outsmart the herd and you can outsmart the algorithm, and, you can win money based on just being smarter than everyone else. Like that's what initially got me and my brother and my friends all hooked on daily fantasy, and like, now like a diehard DraftKings user, right? Like I use the app like I wouldn't say daily, but all the time. But I do use Photo Finish daily or almost daily. I'm always participating in races. I'm checking my stables. I'm, going through the breeding process. It's really like, an addicting game to play. Just it's super fun. And the other aspect of it that makes it truly fun is like in true Web3 fashion, there's a super strong community around it. And it's like you feel like you're a part of something by being a part of and playing this game. And I think that's also like what makes it unique from, the kind of historical, like, X to earn games where you're kind of grinding, right? Like you're not necessarily like playing something that's fun and like gives you a rush. You're like grinding to earn a token incentive in the game. Here, like that's all happening, right? Like you get token incentives and there's rewards for playing, and, the token is vital to participating in the game. But like, I think the experience and the rush of potentially beating everyone else is actually like the first thing that comes to mind for me that stands out about the experience that's unique.
I love that focus on like opening people's eyes to not everything needs to be a AAA game. If you remember like Flappy Bird, right? Very, very basic bare bones game that addicted everybody overnight. So I like that approach. How do you think about, I feel like a lot of gaming right now is like infrastructure based. Like, Immutable X wants to have its own chain for this like gaming marketplace and games to like kind of connect into. And Scott Stenardo's project Argus, they're building like, again, this like gaming infrastructure. Yeah. How do you think that's going to play out relative to just building games on like one large monolith?
Yeah, it's a really good question. I think, there's certainly some unique approaches to building gaming based infrastructure. I do think it's like with regards specifically to crypto gaming, like I'm not sure if there's demand like justifying that build out, or if there's again like a hypothesis that this is what's necessary to get more games built on chain. But I do think in the case of like Photo Finish, they have certainly been able to launch on Solana, make use of the Solana ecosystem and the ledger and do that successfully, right? So yeah, I'm not sure. Like we'll see if future games gravitate towards some of this like newer, shinier infrastructure, because of some of the like very specific niche benefits that they provide. But yeah, it's only time will tell on that, I think.
I want to maybe reduce the collective IQ of the listeners here for a sec and ask what you think about meme coins in their current state. So obviously, I'm not sure what exactly has happened. I mean, I don't even think rates changed that much, and like the markets are just, I guess the Bitcoin all-time high is affecting this.
Well, rates haven't changed. I think it's the expectation that rates will has changed. But right. Yeah, rates themselves haven't changed yet.
Actually, that also brings me to another question, which is what you think about maybe like the Bitcoin and Ethereum ETFs with your kind of background in capital markets. Mm-hmm. And then on the total opposite side of that, what do you think of the state of meme coins and why they're like so? I mean, Bonk, I believe flipped like Sui, say, Celestia, Arbitrum, and that just doesn't make sense to anybody, especially in TradFi. What's happening there?
Yeah. Well, which do you want to talk about first? Do you want to talk about the ETF or
yeah, let's do ETF first and then memes.
Yeah. So okay. Well, yeah. So we have this like whole thesis on the convergence of financial markets. We've been thinking about this for a long time, for like 5-6 years, right? And the entire thesis is that TradFi, CFI, and DeFi are actually slowly converging. It's going to take a long time for that to fully play out. but it's converging on a couple different levels, on three levels, right? On the technology, so shared use of that technology. We're going to use some of the traditional capital markets technology. They want to use blockchain, bring assets on chain, easier to track, lower settlement costs, et cetera. And then there's shared assets. So we want their assets, RWA, right? We're bringing TradFi assets on chain, treasuries, real estate, private credit. We're bringing that on chain. They want our assets, right? Assets are converging. So they're taking our assets, productizing them in the way that they know how by putting them into an ETF. I think, look, it's a watershed moment for crypto. Like, we've never had this level of institutionalization of any of our assets, period. You can look at the fund flows to back it up. It's a crazy thing to see after being in the space for such a long time that it finally happened. But yeah, it's undeniably a massive demand catalyst for Bitcoin. And I know the deadline just got delayed, or the decision just got delayed for ETH, but I think it's probably inevitability that that'll happen. I don't know if it's this year or next year. And I think that leads into other assets like Sol eventually getting its own ETF, and maybe others. But yeah, I think it's incredible moment for the space.
Before we jump into the meme coin stuff, I do want to hit on that, but let's hammer home on the capital market stuff. So Larry Fink's always yapping about tokenize everything, and part of that is they hold a lot of equities that have voting rights on behalf of like pension funds and ultimately individual people. And it seems to me that he just doesn't want that burden. And is his like thesis around wanting to tokenize everything really to just like get that liability off his hands? Or like, how do you think about this whole notion of BlackRock wanting to tokenize assets? Like, what does that actually mean in terms of like what it looks like on chain?
Yeah. I don't know if there's a governance aspect to what he's getting after, because like a lot, governance in equities is really interesting. Like, there's the whole kind of like street name account concept. So like most brokerages are like either voting on your behalf, or they're like mailing you a letter to see if you want to participate in a board decision, and they send you a big packet of information, and pretty much most people don't participate, right? So I don't, and that's not like BlackRock doing that. That's outsourced to like computer shares and like all these other companies that they outsource that to. But I think the what I said is like the savings and settlement costs, I think is really a massive driver. Like if you look at, I'm not sure if they like publish data on this, but Franklin Templeton and like their whole kind of like Benji operation, they were able to like swap out their what's it called? Their trading agent, or their transfer agent, excuse me. And cut costs on that by like 90% by moving it on chain and having this kind of like decentralized, permissionless transfer agent. So I think, when you're managing tens of trillions in assets, and you can cut transfer agent costs by 90%. That's like a pretty massive. That moves the needle, right, for any asset manager.
Okay, that all makes sense to me then. And I guess the last piece I have on this is what, like, this is, I guess, when you think about, JP Morgan has Onyx, which is like their private blockchain.
Mm-hmm.
And this conversation always tends to hit on private blockchains. Like, what do these guys want? Like, do they want everything to be on like an interoperable, decentralized network, like say Solana? Or do they want like their own little bin to go play within that maybe they can like select who they interact with or something around like this nature?
Yeah. Well, I think the like they get the most cost savings and efficiency out of outsourcing it to a public network. And I think that's like what Benji and Franklin Templeton has kind of proven, right? Like, they're not building this on their own like private permission chain. They're doing this like on a public blockchain or an L2, right? So I think that's ultimately the goal. But the banks are really slow. They and we analyze this in kind of like a crawl, walk, run, kind of model. So I think that's what they're doing. Like, it all started with like not Bitcoin, it's blockchain. We're going to have our own kind of like permissioned private enterprise blockchains. We'll create the partnerships and manage the technology. But it's like cumbersome and burdensome to manage a massive technology stack, right? Just period. So now we've moved on to, the walk phase, which is, okay, we're gonna create like white labeled access to Polygon or Solana or I think Benji's on Polygon, so we'll use that example, right? So we're going to create white labeled access to this L2, so you have to go through our UI and like KYC with us to make sure that you're not a bad actor, and we're in compliance, and that's kind of like where we are today. I think the run phase is when we start ramping up things like on-chain identity, and we can have these assets trading in like basically DeFi pools that are white labeled with something like token extensions and on-chain identity, so that you have the freedom to move in and out of protocols like pretty seamlessly and don't have to go through one singular user interface or experience to KYC with like a Franklin Templeton. You can do that. It'll be on chain and it'll kind of move along through the ecosystem with you.
Perfect. No, I think that gives a ton of context as well. And I guess this takes us to meme coins. I want to hear your take on it. Mert and I did an episode that went out the Tuesday before this episode will be released. And we kind of just gave our thoughts on it. Like, Mert has some great takes around. The reality is meme coins are what people are using right now on chain, and it's a great stress test for the Solana network. But I'm curious how you think about all this madness that's happening.
Yeah. I mean, look, like crypto is an internet community. It's an internet digitally native community. I think like the internet's about memes and fun, right? And I think like people view meme coins as like the perfect embodiment of capital markets and fun in crypto, right? So I'm absolutely not surprised that they're doing well and people are aping. I think Mert actually made a comment earlier on Twitter about like why, or he asked a question, I think, about like why are meme coins like more efficient or doing better than like NFT communities. And my answer to that was like I think it's because there's like zero barriers to entry to like participating in a meme coin community. Like you could put $5 in, right? Like you can put $10. Like it doesn't matter. Like you can buy any like infinitesimal amount of this asset, and like boom, you're part of the trend. You're part of the community. You're like in the meme, like with the rest of like the holders. So it's like so much easier for these assets to get like a really broad based distribution. Whereas like NFTs have the barriers of, like the 10,000 PFP community, there's like the floor price. And if anything gets like any level of recognition, it's going to be fairly expensive, at least hundreds of dollars, which prices a lot of people out. I know there's like shared buying and group buying of NFTs, but that in itself is a barrier, right? Like you have to convince other people to come along with you and like share in this like purchase, right? Whereas like the meme coins, it's like, oh, wow. What is it, like Geo Bowden? Like, oh, that's hilarious. Like, I'm gonna go buy that. Like, I don't own any. So just, for right, clarification. Right. But it's like, oh, I saw that and I was like, that's hilarious. Like
they're like, all good. Like Kim Jong-un.
Yeah, like Baruch Obama or something. Like, I mean, come on. It's objectively funny. So like, I get it. Like, it's awesome.
Yeah, you said something at the beginning of this. I think it was like in the first question, just talking about how like when you think about Bitcoin, it's like it's still this hard thing for me to explain to my friends. The ETF goes live, I get this influx of texts that's like, oh, this crypto thing you've been doing the past few years, like I guess it's important again. And they're like, what's Bitcoin? And it's like. Like it's honestly kind of just a meme coin in some ways, and there we go. We'll piss people off with that one. But the other side of that is, what I spend all my time thinking about and interacting with is general purpose smart contract chains. That's like where all this very, very interesting innovation is happening. And for me, the pitch to people is so much easier when you're like, hey, this is just a digital economy with goods and services, just as you see in the physical world, relative to this like idea of digital gold. Like it's way less tangible. And even if you buy it, like, okay, now it's just sitting in your wallet and then what? Versus you buy one soul and you go buy some Baruch Obama, and like even if you lose money, it's still funny as shit. And so it's funny, like people keep talking about like the likelihood of the ETH ETF, and they're like, oh no, that's just like not a thing to explain to normal people. And I'm like, yeah, I think it is. Like digital economies are way more tangible to me. Curious if you have any thoughts like on how, you've been obviously talking about crypto and you talk to a lot of traditional finance folk, and I'm curious if like you have had similar thoughts to that at all.
I mean, totally. Like, it's not a meme coin, but I talk a lot about photo finish with my friends because, like, it's the definition of a digital economy, right? It has this digital horse racing economy, and you can stake their asset crown into a track, and you're part owner of a track. You can help rebrand it, you can promote it so that people race there. It's partly yours, and you're just in this virtual horse racing world. I think that's so cool, and that's like part of the promise of crypto, right?
Yeah, I was an OG Zed Run player, so it's great to see the great work that's going on Photo Finish. I think they did a much better job of creating a community and a bit more of like a game around thing, especially like staking for the tracks. Like that's probably the coolest thing. That when I saw it, I was like, okay, that's like now we're getting to the next level.
The dream is still alive.
It is. I got to break out the stable. I've still got some horses back over there on Polygon. But
awesome.
But Craig, this has been a fantastic discussion, man. Thanks a ton for coming on. I'd honestly love to get you back on at some point. I think we could do a really, really cool episode on the sales and GTM stuff that you and Mert were jamming out about. It was a pleasure to kind of be a fly on the wall and get all the deets for that one. But thanks again, man. This has been a fantastic episode.
Thank you. No, it's been a pleasure. And yeah, anytime. Happy to come back. I think there's a number of topics we could come back and revisit. So, happy to jump on anytime.
Awesome. And we'll put the links to your Substack in there, as well as links to Reciprocal Ventures and some of your profiles as well. So thanks again, everyone, for listening, and we will be back next week.